Good evening, Mr. Johannes, Klocke, ladies and gentlemen. It gives me great pleasure to welcome all of you to the public lecture at the Center for Banking Studies. Now, Center for Banking Studies is conducting a series of lectures for the benefit of general public on important economic issues. Now, our lecture today will be delivered by Mr. Johannes, Klocke on virtual currencies from a payment perspective. In fact, there are lots of myths and unknowns around these virtual currencies. And one area, of course, that one could discuss is virtual currencies from a payment perspective. So that's our topic today. And so that will be delivered by Mr. Johannes, Klocke. Now, Mr. Johannes Klocke is currently working as a senior expert for retail payment systems policy division of the Deutsche Bank. He is involved in policy and strategy in developing more efficient and secure retail payment system in Germany and Europe, as well as the harmonization of European retail payments covering credit transfers, direct debits, card payments, mobile and e-payments. He is also working in the areas of stakeholder dialogue and regulatory issues on national, European and international level. He is a member of different working groups at the national, European and international level, including Eurosystem, BIS publication such as the Journal of Payment and System Strategy. Mr. Klocke possesses a diploma equivalent to a master's degree in economics from Free University Berlin, Germany, specializing in financial and monetary systems, development economics, and the international financial architecture. So, ladies and gentlemen, let me invite Mr. Klocke to deliver his lecture on virtual currencies from a payment perspective. So, please welcome Mr. Klocke.
Well, first of all, thank you very much, Mr. Silva, for this invitation. It's a great honor for me to give this lecture today on virtual currencies from a payments perspective. So it's my first time here in Sri Lanka, and we had 3 days of a great seminar for central bank technical cooperation on payment systems in general. And yeah, my colleague Andreas and me, we already enjoyed quite a lot the good time we had here in Sri Lanka yet. I'm looking forward to an interesting session, and I'm happy to answer your questions and discuss the topic after the brief presentation I want to give. As Mr. Silva already said, so virtual currencies, there are lots of myths around it, and especially Bitcoin received lots of media attention in the last couple of years, I would say like the last 2-3 years. Of course, central banks are and should be interested in these, I would say, technical developments, and I would like to give some insights from a payments perspective. So, why Bitcoins and Co? There you go. So people might say, yeah, it's a great new technology, it may be a business opportunity for me. I could invest in it, I can earn money, I could lose money. Others might say, okay, it's a decentralized currency, no government involved, no central bank involved, completely anonymous, that's good for me as well. Others say, okay, yeah, it's a new currency and it helps me to make payments on the global scale quickly and cheaply and more efficiently. So these are like some of the typical myths around Bitcoins, but as you will see, so there are also many downside risks to it, and I want to shed some light on these regular impressions regarding virtual currencies in general. First, just to give you an impression and to see, okay, how is it compared to the legal tender we have, the cash or gold. So first of all, well, as the name says, virtual currencies, they are virtual, so it's no physical object involved. Other way around, with cash, you can feel it, you can see it, you can hold it in your hands, you pass it through, so it's a physical object. The same holds true for gold. Well, legal tender, the only legal tender is the cash you have in your country, in your currency area. For us in Europe, or in the euro area, it's the euro, which is the legal tender for more than just one country, but normally it's just cash accepted as legal tender in one country. Well, maximum issue limit, so cash could be but shouldn't be. Well, we're central bankers, so we know what happens if we print too much cash. So there's no issuing limit, but for bitcoins especially, or for most of the virtual currencies, this holds true. There is a maximum limit. And for gold, I would say, well, you have to dig deeper and deeper and search harder and harder for it, and over millions of years new gold will be created, so there's kind of a maximum issuing limit. And so, but the other aspect of intrinsic value, well, cash, it's obligation of the central bank, so you just know by heart it has a value because I can repay my debts with it, as long as we care for the inflation, of course. Bitcoins, on the other hand, so there's no central institution behind it. There's no central issuing party. So the only value it gets is because you know that others may accept the virtual currency as well for transaction, for a store of value, whatever you might look at. Gold, yeah, well, gold has a real intrinsic value because gold is needed. It's just like it's a commodity with an intrinsic value to it. We as central bankers, we know it. We like to keep some of it in our safes for bad times, and but that's not the case for virtual currencies. Easy to use to make payments with, yeah, sure, cash, everybody accepted. You can hand it over quite easy. Virtual currencies, I don't know. I said it's possible, but maybe I would give them some brackets as well, because you need some technical devices for it, for example. So in principle, it's easy, but there are some limitations to it. And yes, if you have gold and the other one accepts the gold for goods or services, so it's also quite easy to make payments with it. So looking at it, payments 3 times yes could be interesting for the payment segment, but we will see why it might not be that way. Anonymity, cash for sure, you don't leave a footprint like with a card payment, you can just exchange it. So for fraudulent behavior, for different illegal activities, cash might be the first choice. Virtual currencies, on the other hand, so people say it's anonymous, but why this isn't so, I will tell you later on. Well, use on the internet. There are some ways to use cash on the internet, but it's quite complicated. So, for example, that's one thing which is possible in Germany. So if you buy something online in an online shop, you get, when you buy the product and at the end of the payment process, you get like a barcode, and you print it out, or you can send it to your mobile phone. You go to a retail store, to a physical store, which also accept this payment instrument, and then you can buy or pay for the online purchase either by cash or by card payment at the normal point of sale. But in general, cash can't be used on the internet. Virtual currencies, yeah, the name says it so. It's mainly based in the virtual world, so for sure you can use it on the internet. Gold, I don't think so. So what are the main lines of differentiation for the regular coins and banknotes? So there's normally a central issuer, the central bank. and it's physical. On the digital side, you have book money, bank money, e-money. All this is all the same money issued by the central bank or converted into e-money. Decentralized but physical, you can look at commodities like gold, silver, and so forth. And then in the digital and decentralized sphere, you mainly find virtual currencies. So they are normally platform-specific, decentralized, and peer-to-peer, which means you can use them to transfer these units of exchange from person to person directly. So below I give like one definition. The Euro system came up in 2012 in a report called Virtual Currency Schemes. There will be an update to this report in the coming days, I think. And so a virtual currency is a type of unregulated digital money controlled by its developers, not a central bank, accepted among the members of a specific virtual community. I would also give some brackets to virtual because it's a community in general, so it doesn't have to be only online, it can also be physical. If you look at the features, you have this invented currency, so the virtual currency, and from a payments perspective, the funds transfer system. So a system which you use to transfer funds from A to B in an electronic manner. So the virtual currency, as we already saw, has no intrinsic value. It's just the belief that others accept it for payment. It's not a legal tender, and the supply is determined normally by a mathematical algorithm. Fund transfer systems are used for transfers between users, could be used flexible for e-commerce, point of sale, or person-to-person payments, and has a global reach. So this is like the virtual currency payments perspective if you combine the two aspects all together. So the technical features, it's the mathematical algorithm, so it's also called cryptocurrencies because of that. And there are mathematical principles being the basis for these currencies. The peer-to-peer network allows for the proof and transfer of ownership. I will give you the details later on. And it's open source and ledger-based protocol. The software is freely available. So what does ledger-based mean? So this is like the key technology for virtual currencies. You can think of the ledger as kind of a transaction chain. So there's one protocol where every transaction ever made or every virtual unit created is stored. So it's normally stored decentralized. So there's no central party like a bank or a central bank where this database is stored, but it's stored decentralized by most of the users on their computers. So this is why it's not so easy to manipulate, because if you manipulate one of these ledgers, all of the others would have been manipulated as well. So the information, the same information, is stored at many places at the same time. And so this ledger, I will elaborate on that later on, is quite important for the whole understanding of virtual currencies. So how can you, I just give you the example of Bitcoins because it's the most renowned virtual currency. How do I get hold of Bitcoins? So first you can purchase them. Normally that's done online, so there are exchange platforms where you can trade in like real currency, whichever currency is accepted on the platform, and buy Bitcoins instead. So on the other hand, on the other side, there has to be a seller of these Bitcoins for sure. There are also sometimes kind of local Bitcoin exchanges, but this is rarely seen. So like people meet and exchange bitcoins through mobile devices, for example. And there are also plans, but looking at the development of the Bitcoin for the moment, it probably will be only plans to purchase Bitcoins directly. The other way to get hold on Bitcoins is by mining them. So mining, the term reminds of mining for gold, and really there's some similarity between it because, well, it's IT-based in this case, and so the mathematical algorithm for a virtual currency, it has to be solved, and when you solve it, you create a new Bitcoin, a new virtual currency, a new unit. And to solve this mathematical problem, nowadays you need quite a lot of IT power, and the chances for a successful solution of the mathematical problem are quite small. But when you accomplish that, in return you receive a number of virtual coins. The other way is you participate in this virtual currency network, and a share is paid out to you dependent on the computer power you provide to the whole mining pool. So it's like many different computers put together in one network, and they try to solve this mathematical equation as well. Where can I store Bitcoins? So first of all, mainly these are online wallets. So for example, on your computer or on your mobile phone in an app. You can also use Bitcoin exchanges or providers which don't have the right of the full authorization for holding your Bitcoins. So they are not stored directly, as you can see. So wallets do not save Bitcoins directly. They are just the keys required to use them. So what's the key? Well, like in a marketplace where all people have their, let's say, mailbox. Everybody is able to throw a letter in the mailbox, so to transfer a Bitcoin to this mailbox. But only the person owing the personal mailbox has the key to open it, to access it. And this personal key is stored in your wallet, in your account. So you're not having the virtual currency directly in this account. But it's just the access to this ledger, because in the ledger, all of these transactions are stored. So the ledger, you can think of compiling different single mailboxes. And all of these mailboxes and the transaction between the different mailboxes are kept in this database, in this ledger. And when you make a transaction, you need the key to access your personal mailbox, take a Bitcoin out and send it to another one. And regarding the question of anonymity, because mostly, so you act in the network with an alias. Normally the people don't use their real name. So this is the type of anonymity sometimes granted to virtual currencies, but there are ways to find out who stays behind it. For example, the IP address of the computer or the mobile you used for making the transaction could be identified, or if you purchase something on the internet via virtual currencies and you leave behind your mailing address, well, you can be identified as well. So it's not really anonymous. Sorry. How are they transferred? I already gave some idea about it, how you could transfer them. And now I want to go into the details. So first, the sender, for example me, has to confirm that I'm the real owner of the Bitcoins I'm using, and this is done by the identification of the private key I possess. So then there's a mathematical algorithm calculating a public key out of this private key, and my transaction I want to make from point Y to point X is not sent through one of these nodes, the other members of the network, but through all of them. In these nodes, a verification of the transaction is made. So it's checked because all of them have the central ledger stored in the nodes. So all of them have the same information on all the transaction which happened until this moment in time. So it can be checked in every node whether I have sufficient cover, whether I am the lawful owner of the virtual currency by checking the private key against the public key. Then, if there's sufficient cover, that message is distributed through the network and the signature is proved. But then the last step is the so-called miners, the one who can also create new bitcoins. They collect all transactions going on in the network and bundle them together in this transaction chain into one new block. Then this block is solved by solving this mathematical problem and then added to the whole transaction chain. And then in the end, this new block is distributed to all the other nodes having the decentralized ledger in their node as well. So then the whole system is updated and everybody has the same new information. So this is also done by the different colors. So the one who is solving the problem is the green one over here. And then he gives the information to all the other nodes as well. So this a little bit about the technique behind it. Promise, I already touched upon that. So maybe one would say, there's no governmental influence for certain people. This may be one of the key aspects. Others say, so the use of anonymity, but actually it's not really that anonymous. Others say because you have the ledger, so every transaction is fully transparent to everyone. Everyone can access the whole transaction chain, so it's not possible to make any transaction, for example, you could say from a tax perspective. So this could be interesting because then you could always see which individuals have made which transactions, and so you have full transparency on all the transactions. Others might say, so it's quite cheap. You don't need banks to do transactions, to do payments with virtual currencies. You can use the internet for communication. There's no authority needed, but the whole network is doing the verification, so you don't need a third party. And no bank accounts are needed in the first place. So when you want to exchange them to real currency, normally you need a bank account. And it's quite high speed, so everybody's talking about real-time payments nowadays, and so it's quite high speed because it only takes a couple of minutes until transaction is finalized. But looking at the reality, it's quite different. So these are just 4 charts. So the first on the upper left-hand side is the Bitcoin, just another example, the Bitcoin again because it's the most prominent one, and the US dollar exchange rate. So you saw some steep rises in the exchange rate, so you don't have no, it's not readable, but it started around $0 in the beginning of January 2013, and then you had steep rises up to more than $1,000 per Bitcoin. So what were the reasons behind it? So mostly it was news, and there was quite a media hype around it. And in the beginning, it was easy to create new Bitcoins. And then all of a sudden, it dropped. Why did that happen? Well, for example, there was one of the exchanges where people were holding their bitcoins. This went bankrupt, and many people lost millions of dollars. So the trust in the system declined, and that you can see many times. So there were hacking attacks on the system, and so the general trust and the high volatility doesn't really satisfy the users. So looking at the aspects of money, what is money? So it's a unit of exchange, it's a storage of value, it's a means for transactions. And looking at virtual currencies, it's not really a currency, because you can't say you're able to store value. With that kind of volatility, or looking at the daily transaction volumes and the volatility in the transaction volumes, so there's no store of value. On the other hand, so with no store of value, also the payment function is affected, because if you can't really trust in it, people would like to exchange it the fastest possible into real currency. So maybe you could use the technology, but the virtual currency itself is not really counted as a means for transaction. Looking at the market capitalization, so this is in billions of US dollars, and so the most prominent currency, Bitcoins, has a market capitalization of roughly 3 billion US dollars. And then the other most prominent one, it's hard to see, but the second most important one, it's only 500 million US dollars, and then it almost drops to zero. So looking at a market capitalization of 3 billion US dollars, it may sound a lot, but when you look at the daily transaction volume of global payment networks, you see that the numbers are a lot higher. For example, so this one is the Visa scheme, the second one is MasterCard, so the daily transaction volume for Visa is around 200 million transactions a day. Bitcoins, compared to that, is around 90,000 transactions globally. So really nothing. So from a currency perspective, so they are really of any large importance compared to other means of payment. What about Bitcoins as a transaction medium? One large issue with it is that the ownership is heavily concentrated. So I'm sorry that it's really hard to read for you, but I think you will get the handouts afterwards. So I just give you some key facts around it. As you can tell, for example, around 96% here are holding almost nothing of all the Bitcoins. So in total, 3% or 3 of all the people using Bitcoins own more than 3%, or the upper 1,000 users own more than 50% of all the Bitcoins. So it's heavily concentrated in a few users. So for example, if one user sells his Bitcoins, this has a heavy impact on the market price, because the market is flat, it's not really deep, and so this heavily impacts the price development on the market. So as you also can see, the low return frequency, looking at the number of wallets, so there are around 2.4 million wallets worldwide where Bitcoins are stored, but there's only 33,000 transactions on the average. So it's 0.02 transactions per holder of Bitcoins. So the actual transaction volume is quite low. If you look at the currencies which are Bitcoins traded in, so by far the largest share is the Chinese yuan, followed by the US dollar. Then there's the euro, the British pound, and the Canadian dollar. So what are the general threats of virtual currencies in general? So from a legal perspective, because of the pseudo-anonymity, we say, first, it's hard to qualify. What are bitcoins? Are they a medium of exchange? Are they a currency? How should they treated be like? From a compliance perspective, anti-money laundering, terrorist financing, these are the questions which really matter for regulators, of course. From a governance perspective, so there's not one single entity responsible for a virtual currency. So this also, from a regulatory perspective, may be difficult because you can't address one single entity. Regarding risk management, so there's no risk management framework for virtual currencies. They are highly volatile, so there's a high credit and liquidity risk involved in it if you deal with them yourself, if you invest in them. Low security, reliability of the actors, because it's also kind of a new business, and if something goes wrong in a Bitcoin exchange, it has severe financial consequences because normally the people lose all the money they invested in the virtual currencies. Besides, until now the volumes are quite low, so you don't really can tell if the IT infrastructure behind it is also able to solve it for large amounts of virtual currency. So the proof still does not exist. In general, even though you can look at the ledger and you see all the transactions there, the overall transparency is quite low, so there are no formal ways in identifying a holder of virtual currencies, for example. This is just like an overview because the European Banking Authority, they also investigated on the different risks associated with virtual currency. So you see a lot of red there. I just picked out a few of the possible risks. And these mainly are, so they are highly speculative form of investment, and they are not covered by any bank deposit or guarantee scheme. So you can say the same applies for other investments because if you make a bad investment, you can also lose all of your money. But from our perspective, so you have to be careful because it's highly speculative. Also, there's no central issuing authority, so regarding the algorithm, you have to trust in the system, but it could be changed by the inventors of it, for example. So it's also a trust issue in the whole virtual currency scheme. And the value, we said, so there's no intrinsic value, there's no way to, or you don't have the security that you can repay your debt with it. So it's only the security that others will accept virtual currencies in the future as well. So in some ways you can say they are like cash, they are a little bit anonymous, and this may make them attractive for illegal activities. If you store your bitcoins on a hard drive, for example, and this is lost, all the bitcoins are lost as well. So you can use it quite easily. And as I already pointed out, a large number of bitcoins have already been stolen. So the main reason was that the wallets the people stored the keys in, their private key, weren't adequately protected. The systems of the providers were insufficiently safeguarded, they were hacked, and the same holds true for the exchange platforms where bitcoins are held or traded. So there were different hacks and robberies of virtual currencies, and this also had detrimental effects on the trust in bitcoins especially. To give you an idea how we look at it in Germany from a regulatory perspective, so the BaFin, it's our financial supervisory authority, and so they said it's a financial instrument in the form of units of account, and so it's no commodity, for example, it's no currency, but it's just like an investment vehicle. So if you just use them, if you buy them, if you sell them, you don't need any license for that. You're not regulated. It's all at your own risk. So if you want to invest in it, you can do it, but you always have to be aware that you can lose all your money invested in it. However, you need a license if you provide broking services. So meaning that you are the owner of some kind of virtual currency exchange where you can trade real money into virtual currencies. And there exists one of these platforms in Germany, and it's officially licensed by the Financial Services Authority. From a tax perspective, bitcoins or virtual currencies in general are subject to turnover tax. So if you invest in them and if you earn some money with it, you have to make it public to the tax authority. And in Europe, so the European Banking Authority, when they had the look at virtual currencies, they said a comprehensive and new regulatory framework would be required when the importance of virtual currency rises. So at the moment, there's no need seen for it to establish a competent governance authorities responsible for the supervision of virtual currencies. Also, the exchanges for bitcoins, they should fulfill capital requirements to cover their risk of loss, for example. And there needs to be, just like in classic banking, a separation of customer accounts, for example, as you, on the short term. So the suggestion just was the same thing what we did in Germany was to warn the people that they shouldn't hold or sell virtual currencies due to the risks incurred in it. For the future, yes, anti-money laundering plays an important role, and then it should be applied to virtual currency schemes as well, especially to the interfaces where virtual currencies are traded into real currency. So, on the upside, or do you think what could be good about it? What could be the benefits of virtual currencies from a developing country perspective? For example, the remittances, so international transactions, maybe they could profit from the use of virtual currencies due to the technologies lying behind it. So this really could be a potential use case, because nowadays, for example, correspondent banking is quite expensive and complicated. So this is one of the potential use cases seen. But only if the system develops further and regulatory issues are covered. So there are gaps in the banking infrastructure. So you could say for virtual currencies, no bank account are needed, but you can say the same for mobile payments, for example. But on the downside, if you have to cash it out, so you need an agent network. It's technically highly complex, so mobile phone penetration, internet penetration, so all this is a prerequisite for virtual currencies. So if the IT infrastructure or financial illiteracy is there, so this can be hindering. And because virtual currencies are prone to high volatility, and it's also like a non-domestic currency, it doesn't really seem valuable to use them as a means of payment at the moment. So, can virtual currencies contribute to global integration in the payments market? So, if virtual currencies at the moment, so their meaning is almost not there. So, it's a hype, they're in the media, people talk about it, it's a new technology, central banks should be aware of that and monitor it closely. But at the moment, it's only a niche phenomena. But if they should become more prominent, so it's highly likely that regulation will follow. It's even starting to be regulated. so the overall costs of virtual currencies will increase. So if the exchanges are regulated, if the traders are regulated, if, for example, insurances are necessary for the exchanges, so this will drive the overall costs of virtual currencies up. On the other side, so the price volatility still is high, the fraud risk is high at the moment, so this also drives up the end user's costs. The business model, so at the moment for the miners, they generate profit by digging for more virtual currencies, but over time the mining rate decreases. So it's harder for them to be compensated for the energy they put into it. This will drive the transaction fees up, so another cost factor for virtual currencies. And also, as the system is built, so the ones already in the system profit from it more than the new entrants to the system. So this, from a competition perspective, is another downside. So as you can see, if you really think it through, so there are some interesting myths around it, but looking at the reality, the picture is quite different. So, as I already said, so the fund transfer function, so the ledger, this could be interesting to look in. And there was, for example, a publication by the Bank of England recently on this technology, how it could be used for other cases as well. And it may be an innovative idea for payments as well, but at the moment, it really gathers low attractivity as a digital currency in general. So I would say that for the time being, it should be monitored by central banks. We should be keen of it. We should follow the developments and monitor it closely, but it's not of that importance yet as it may sound due to the media. Yeah, thank you very much.